Everyone talks about cryptocurrency as a way to get rich fast. Quick gains, massive returns. Stories of people turning small amounts into life-changing money. And those stories are powerful. They pull people in. They create urgency. They make it feel like if you're not participating, you're missing out on something huge. But here's the problem. That mindset is exactly what prevents most people from actually building wealth with crypto. Because when you approach cryptocurrency like a shortcut, you don't build stability. You build exposure. And exposure without structure leads to volatility in your results. Sometimes up, sometimes down, but rarely consistent. And consistency is what builds real wealth, especially family wealth. Because the goal isn't just to make money once. The goal is to create something that lasts. Something that supports your family not just today, but years into the future. So the real question isn't, can crypto make you rich? The better question is, can crypto be used as a disciplined tool to grow and sustain wealth over time? The answer is yes, but only if you approach it differently than the majority of people. Because crypto is not just an opportunity, it's also a responsibility. And without a clear strategy, it can easily become a source of financial instability instead of growth. So let's break down how to actually use cryptocurrency the right way. Not as speculation, but as part of a long-term wealth system. Shift number 1. Stop treating crypto like a shortcut. Most people enter crypto through emotion. They see prices rising quickly. They hear about massive gains. They watch others succeed, and they feel pressure to act. That pressure leads to rushed decisions. Buying without understanding. Following trends instead of strategy. Reacting instead of planning. This is where problems begin. Because crypto markets are highly volatile. They move quickly in both directions. And if your decisions are based on emotion, your outcomes will be inconsistent. You might experience short-term success, but over time, emotional investing creates instability. Smart investors take a completely different approach. They slow down, they step back, they build a framework before they invest. They define how much of their total wealth will be allocated to crypto, what types of assets they are comfortable holding, what their long-term objective is, how they will respond to market volatility. This changes everything. Because once a framework is in place, decisions become structured. You're no longer reacting to every price movement. You're following a plan. And plans create consistency. Shift number 2. Define crypto's role in your financial system. One of the biggest mistakes people make is overcommitting to crypto. They treat it like their primary path to wealth. Or worse, their only plan. This creates unnecessary risk. Because no single asset class should carry your entire financial future. Smart investors think in terms of allocation. They divide their wealth into different categories based on purpose. Some money is for stability. Some is for liquidity. Some is for long-term growth. Crypto fits into the growth category. It has higher potential returns, but it also carries higher volatility. That's why it should represent a controlled portion of your overall portfolio. Not everything. This balance is what protects families from major financial setbacks. If crypto performs well, it accelerates growth. If it underperforms, it doesn't collapse the entire system. Because the foundation remains intact, the goal isn't to maximize risk. It's to optimize stability and growth together. Shift number 3. Focus on fundamentals, not hype. Crypto moves fast. New projects appear constantly. Trends rise and fall quickly, and social media amplifies everything. This creates an environment filled with noise. And noise leads to poor decisions. Because when you focus on hype, you lose direction. You start chasing instead of evaluating. Instead of asking, is this valuable? You start asking, is this trending? That shift is dangerous. Disciplined investors focus on fundamentals. They look at long-term value. They consider, is this asset widely adopted? Does it solve a real-world problem? Is there consistent development and growth? Does it have long-term relevance? These questions create clarity. And clarity reduces mistakes. Because instead of jumping from one trend to another, you build a focused portfolio. You invest with intention, and intention leads to consistency. Shift number 4. Use consistency to defeat volatility. One of the biggest challenges in crypto is timing. Prices move unpredictably. Trying to buy at the lowest point or sell at the highest point is extremely difficult. Even experienced investors struggle with this. That's why consistency is more powerful than prediction. Instead of trying to time the market perfectly, disciplined investors use structured approaches. They invest regularly, weekly, monthly, or aligned with their income cycle. This approach removes the pressure of timing. You don't need to guess, you don't need to predict. You simply follow the system. Over time, this creates a more stable average entry point. And more importantly, it keeps you engaged with the market in a controlled way. Consistency reduces emotional decision-making. And emotional control is one of the most important factors in long-term success. Shift number 5. Protect your assets like a professional. In traditional finance, institutions handle security. Banks protect deposits. Systems monitor fraud. Transactions can often be reversed. In crypto, that responsibility shifts to you. And that's where many people underestimate the risk. Security mistakes in crypto are often permanent. Lost access, phishing attacks, fraudulent platforms. These are real risks, and they can erase wealth instantly. That's why serious investors treat security as a core part of their strategy, not an afterthought. They take steps to protect their holdings. They store long-term assets securely. They verify platforms before using them. They avoid unnecessary exposure, because building wealth is only meaningful if it can be preserved. Protection is what turns growth into longevity. Shift number 6. Build systems to control. Emotion. Crypto markets are emotional by design. Rapid gains create excitement. Sharp declines create fear. And both emotions can lead to poor decisions. Buying too late, selling too early, changing strategy repeatedly. These patterns destroy consistency. And without consistency, wealth cannot compound. Smart investors understand this. They don't rely on willpower alone. They create systems that reduce emotional interference. Clear allocation rules, regular investment schedules, defined holding periods. These systems create structure, and structure creates discipline. Because when decisions are made in advance, emotions have less influence. Shift number 7. Think in decades, not cycles. Most people approach crypto with a short-term mindset. They focus on cycles, bull markets, bear markets, short-term gains. But long-term wealth requires a different perspective. It requires thinking in decades. Not months, not weeks, decades. Because over long periods, innovation compounds, adoption grows, technology evolves, and value stabilizes. Crypto is still developing as a financial system. Its long-term impact is still unfolding. That creates uncertainty, but it also creates opportunity. Families that think long-term don't try to predict every move. They build exposure gradually, they manage risk carefully, and they remain consistent. Because wealth is not built through one perfect decision. It's built through thousands of small, disciplined ones. The hidden risk, behavior. Most people think the biggest risk in crypto is volatility. But volatility is visible. It's expected. The real risk is behavior. Over-investing during excitement. Panic selling during fear. Chasing trends without understanding. Ignoring long-term strategy. These behaviors destroy wealth faster than market movements ever could. That's why discipline matters more than knowledge alone. Because knowing what to do is not enough. You have to actually do it consistently. The smart strategy. When you simplify everything, the approach becomes clear. Crypto should be used as a measured, strategic component of your financial plan. Not the foundation, not the shortcut, but a tool. Focus on quality over hype. Invest consistently instead of emotionally. Protect your assets carefully. Control behavior through systems. Think long-term. When these principles are followed, crypto becomes something powerful. Not unpredictable, not chaotic, but structured. And structure is what builds lasting wealth. Final perspective. Cryptocurrency has created incredible opportunities. It has also created significant losses. The difference between the two is rarely luck. It's approach. If you chase hype, you experience volatility without direction. If you build a system, you create consistency. And consistency is what allows wealth to grow over time. Because financial freedom is not built on one big win. It's built on discipline, on patience, on structure, and on the ability to stay consistent when others are reacting emotionally. When used correctly, cryptocurrency can become part of that system, helping your family not just grow wealth, but protect it, sustain it, and carry it forward into the future.